This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe at SIBOS. We are here with John Sauter, CCO of Clearbank, and let's start with a little bit of context. You see that we have very different looks, but from the beginning of our conversation, he's as cool as me. He's just wore a shirt. Welcome to Breaking Banks Europe.
Thank you for having me. Great to be here. And you look much cooler than I do, so thank you for the compliment.
So tell me a little bit about your role, and also pitch us a little bit Clearbank.
What Clearbank do? So, CCO. So, 3 years at Clearbank, I look after the clients. I'm responsible for all the clients. We have over 200 clients now, all fintechs, banks, regulated entities. What do we do? Have to explain that a lot because we're not visible on the high street, but you'll know all the
Another
brands.
plumber, I would say.
Good way of thinking of us as a plumber. Yeah, we provide the pipes that power lots of well-known brands. So we are the bank behind. We're an infrastructure bank. So if you sit there and you look at some of the best-known fintech brands in the UK, we probably power them, and we provide all the banking, the bank accounts, the liquidity management, the foreign exchange, the multi-currency. So we provide service to people like TrueLayer, American Express, Tide.
My fellow Francesco friend, Italian friend, 2 years.
TrueLayer, good old Francesco,
Yeah,
exactly.
Francesco,
who owes me tickets for the World Cup and has still not come through. So I was chasing him yesterday.
Yeah,
so,
let's don't go there.
Yeah, that's what he said. You're not going there. so that's what we provide. We provide infrastructure for top brands that want really good payment processing, and obviously we're a bank, a full UK bank. So the money's always held safe. We hold all our money at the Bank of England. We don't lend money. And we just power them and let them focus on their proposition. And quite frankly, they don't have to worry about what's going on behind the scenes. They just know it's going to run perfectly, and it does.
John, actually, I think it was the Money 2020, in a similar context. I think that I invented one line that said regulated business outsourced as a service.
Yeah.
To explain what you guys do, right?
Yeah.
And that was an idiot-proof sort of sentence, to explain people who are not, in this day-to-day. Because, as you said, because you're invisible, you're powering, fintechs and other financial institutions. It's almost like you were born to do embedded finance before embedded finance actually existed, right?
Yeah, that's why we were created. Our founders looked at the fintech market and realized the traditional banks don't have the technology and the flexibility to deliver the propositions that are now out there. So we built it from scratch. So we looked to the future 4 years ago and said, in 4 or 5 years' time, what do we need to have out there to power these companies? And that's what you're looking at today with Clearbank. We say over 200 fintechs on our platform and banks that deliver fantastic client experiences. And that's what they do. They compete at the client experience level, not the banking. Payments should not be the area of competition. The customer experience should be. So if they can forget about the payments, they power their proposition. And that's what we level that playing field out.
So if I put myself, in the shoes and in the ears, of some of our auditors, they're not all fintech experts. They are not into this industry for 15 years, and I can do it pretty easily if I have to. They would ask me why. They would understand why a non-regulated fintech would need Clearbank.
Yeah.
But why would another bank need Clearbank?
Yeah. So we bank in the last 12 months. 10 banks have been approved in the UK, 9 of them bank on us. And the reason why is they're the new challenger neobanks. So the new banks that want to deliver very clear, targeted propositions to certain use cases, certain segments of the market. So there's a bank called Bank North that only banks customers in the north of England. Yeah, and so there are 10 of them so far. And the way they compete with the big banks is, first, they want to look very different. And then secondly, they want it to be very real time. We're in the, I'm talking to someone today about the attention economy, where everyone's competing for our attention. So they want to get someone's attention and then keep them on their platform. And that's what we allow them to do. High quality customer experience. And that's all about speed and reliability and pace. You know, the things we take for granted. But, you know, if you're a nurse and you want to log on at 2 o'clock in the morning, you've come off shift, you really don't want to go online and see, sorry, systems are down for uploading or upgrading and stuff. They need to deal with it then. And that's why the banks come to us, because they know we don't compete. And traditionally you'd have to go to one of the big 4 banks to get the same service. Well, they compete with you. Yeah. So it feels wrong, you know? And so what you get is the negative waterfall effect of any upgrade the big banks do. The last people who are going to get that great upgrade is their competitors, which are their own clients. We're completely the other way around.
Actually, I think as well that you know, the services of a company like Clearbank have been like even more compelling thanks to the fact that digital banking services today become more and more niche, right?
Yes.
You call it like attention, attention, what do you mention? The
attention society or attention economy.
The attention economy.
Yeah.
I call it niche banking, you know, where, you know, the banks for the teachers, or now there is the bank for the creators economy,
Yes.
each one with a very different like needs, context, services, and if anyone has to build it from scratch, you know, their IT cost or even like the time to get the necessary regulatory approval, for example, will be huge, right? This is where you guys come in.
That's where we come in. Yeah, low cost to entry, easy to integrate, execute.
You know, what do you think about the niche banking? You know, the fact that now we see like the banking services built to a level of details and like a capillarity, you know, for a restricted sort of set of clients that, you know, technology would make it impossible until a few years ago. Now, thanks to guys like you, it is possible, right?
Yeah, it is.
Do you get a lot of requests? I'm actually curious now.
Good, you hear. That's the point of the conversation. So, we get a lot of. So we think we'll probably bank most new banks in the UK, and we're coming to Europe. So, you know, the new people that want to take on the existing banks, which we've done some surveys, and I think it's about what drives the conversation. So most of the existing banks, they're not really interested in making payments and balances. They want to sell loans and bonds and everything, you know, all the inverted commas sexy stuff. And as we were just chatting, payments are boring. Well, only if you want to sell all these other products, right? But the other banks want to service those markets where bank accounts and payments are central to a normal relationship. So they come to us for that, rather than go to a big bank, because the big bank's technology and their appetite to share it is not. There's no need for them to do it. They've always got a monopoly.
Of course.
And that's what we don't like.
What is the array of services that you guys sell? I mean, payment rails seems to be like the how you say it, the pasta on the menu, you know, for an Italian restaurant. But
yeah,
sorry
nicely
for
put.
the comparison.
Yeah,
but
nicely put. Yeah, I now work for a pasta company. Yeah. So we think one of the things that makes us good at what we do is we're very clear what we're going to do, and also not dilute that. So we don't want to be a full service bank. That's not what we want to do. So we are, at our core and our heart, we make payments, but we do it brilliantly. So we start there. So we started with just sterling payments because we were founded in the UK. We now do that multi-currency, We provide FX services off of the back, so it naturally, organically expands from the sterling payments.
Of course, makes sense.
We are now providing, strange enough, as a fully digital cloud-based bank, we're about to launch a check service, which in the UK, checks are really important.
Pretty counterintuitive, actually.
Very counterintuitive, but we do it electronically. We do it digitized. So that's what we do. So you're paying a check off of your mobile phone direct through us, and you get it credited, and you can throw the check away. So instead of walking to a branch, queuing up for an hour and everything else. So we're just naturally, organically extending our product set by currency. And we're out here in the Netherlands right now. We've been meeting with the regulator. We go live in the Netherlands probably May or June next year, and then we'll provide both parties, if you like, our European company and our UK company, with a cross-border service, but it feels domestic. So you'll sit in the UK, but you'll be able to transact real time, and we only do real time, to a beneficiary in France. And that's how we see that natural organic growth. But we're not going to come away from our core principles. We're not going to start lending money. We're going to make payments, and we keep all our money, all our clients' money, 100% at the Bank of England. We don't leave. It doesn't go anywhere else. So we consider ourselves the safest bank in the world because we don't lend money. We can't go bust. And if we did, whatever that looked like, you're guaranteed to get your money back. Because the people we help, it's not really their money, it's their clients' money. So we think that safety thing's really important, and it's where we're very different. We don't lose money because we don't lend it. We just keep it at the central bank in the UK, and we'll keep it at the ECB here, and when we're in the US next year, we'll put it at the Fed. So people have absolute confidence that their money is safe 100% of the time. And we think that's really important when you're handing other people's money.
Absolutely, absolutely. And if you take off your hat for a second, of Clearbank, and you have under your jurisdiction, for lack of a better word, a bunch of digital players, that you powered. Okay. And I'm actually genuinely curious because I see, in the past 15 years since I deal with fintech, a bunch of them, rise and fall, getting bigger, getting super, and there is not yet a consolidation wave, in the digital banking.
Yeah.
We just see that some of them, they fuck up basically, and it's fine, it's like the law of the jungle, it's fine.
Happens.
Exactly. But do you see the same or a sort of a consolidation wave, to repeat the word, that will soon happen, like the best funded will eat the others just to acquire clients, or maybe instead of organic growth, by acquisition growth. How do you see that?
So I think we're in a really interesting period for the next 18 months. We've seen venture capital liquidity dry up everywhere. I mean, we've seen some, if I stick with banks simply for that, I know of 2 new banks that have shut down because they ran out of liquidity, they ran out of funding. Talking to other clients that rely on VC funding, they're finding it tough. I think it's inevitable that you're going to see consolidation or people simply exit the arena. I was literally just having this conversation. I think there's probably a big surprise on the horizon. Someone of size will go. I couldn't speculate. We could all speculate.
Of course.
But I think we're in that kind of environment where it's too tough. It's really tough out there. And I think the strong will survive, and there will either be consolidation or exits. And I think there will be some high-profile ones. We were here at Money 2020 in June talking we had an informal breakfast. Of course. And that was the common theme coming from our clients, is somewhere on this display board won't be here next year. And we're pretty sure that's going to happen, which is law of the jungle.
Of course.
But definitely.
I actually think the same, simply because it is not sustainable. If we are, we had a conversation this morning talking about news, of the, we have this format called News from a Fintech Front, and it's funny because no one is talking about financial crisis, but everyone is acting as if it was inevitable, right? But nobody is just yet open about it.
Yes.
And the consequences of it are, or the reasons for it, is that indeed there is a shortage. There is a shortage of cash.
Yeah.
And most of these fintechs are actually relying right on this capital. So and I think that you guys are actually well positioned because you see the flows, right? You see the pipes, right?
Yeah, we do. Yeah, we do.
Exactly.
We do. And I think some of the early, I don't want to say red flags, but signposting, because the regulators are not daft, right? They're quite smart people. They have a way of working, but they are quite smart. And certainly in the UK, and I believe in Europe, from what I heard as well, 12 months ago, the regulator in the UK, and I know the Europeans, wrote to all the fintechs and said, you need to make it very clear where your client's money is. So if you get into the embedded finance, extended value chain, where is the client's money? Because if one of the firms go bust, people need to understand the risks they're running and where is my recourse, who is it to, how do I get my money back and everything else. And so all of the clients in the UK had to explain where their money, each individual client's money was, and explain to them why it's safe and everything else.
And what you're saying is that for you it was easy to explain.
It was dead easy. We just put Bank of England. It was really easy. It generally was. But it was a genuine signposting. They could obviously see what the pressure building, and now you're starting to see why. I mean, there was a couple of high-profile collapses in Europe last year, we all know, right?
Well,
so that really brought it to life. And I think it's really important that we reassure consumers and small companies your money's safe, irrespective of who you are, but that gets more difficult in complex supply chains. Exactly who do I call when my money's missing? And that's why I think the regulators are getting quite intrusive, and I think they will get more intrusive, not less intrusive, because the market's under stress. And so I think everyone's going to get more letters from the regulator, not less. And no one likes getting letters from the regulator, right?
Totally.
Not even a Christmas card. So
Indeed.
But I think that's the other big thing you're going to see. A lot more scrutiny and a lot more questions and a lot more intrusive stuff from the regulators in the next 18 months.
I actually like a lot this silent force, that you guys are providing to industry. And I call it. I worked 13 years for a self-defined plumber of financial services like Swift,
yeah.
right? And there are a lot of ways to Actually, I do have one last question. The motto for Swift for many years was like a failure is not an option, right? And without commenting too much on this, but this is like the one common denominator for the plumbers, right? That you only hear about them when things
goes wrong.
Exactly.
Correct.
Goes wrong. Is that the same for you guys?
Yeah.
And if that was the same, how do you reconcile this with innovation? With the experimenting, side of things, which is always needed, right? To stay in business.
Yeah. You're 100% right. We can't provide infrastructure, and then keep letting people down. Because the effect is, if we're down for 20 minutes or half an hour, it's 200 people that are down. It's not our own business that's down. So we pride ourselves on, and we've got some really smart people, much smarter than me, trust me, our CTO and our tech guys, and they've built in redundancies and everything else. So we have to make sure it works. So we made sure that we stay up. It's the short answer without going into the detail. But you're absolutely right. As in, how the hell do you innovate against that? Because the moment you launch a new service or a new product, I don't care how much testing you do, you're at risk.
Of course.
Candidly, it's a calculated risk.
Yes,
I think you get no it's risk and return. You have to try it. So we do what you'd expect us to do. We test things to death. We have a brilliant sandbox, which is 100% replica of the live environment, and then we work with friends and family clients, and we scale slowly. So we don't deploy a new product until we're as confident as we can be, and touch wood, so far it's gone okay. Things don't always work properly.
Of course. But it's a mindset more than a technical thing, right?
It's just, you just got to, it is a mindset. You have to take a risk, you just minimise it, and the other phrase you hear in fintech is fail fast, right? If it doesn't work, we'll stop it.
Yeah.
We launched a multi-currency product 12 months ago, and candidly, it didn't do what we thought it was meant to do.
Okay.
So we ripped it back out, apologised to kind of our first wave of clients, fixed it, put it back into deployment, and now it works as described. But we didn't see it coming. You can test everything, but it's always the one you don't see. My experience is customers never. You test everything, but customers always use the product the wrong way. They always find a way to use it you didn't see coming.
Absolutely.
And that's what happens. But I think we're very fortunate with the relationships we've got with their clients. They understand we're trying, but if we fail fast, and we try and fix it. But yeah, there's no risk in this. No risk. There's no such thing as zero risk, right?
Absolutely. John, thank you for this, honest answer, the last one, right? Because it is true that there is always a dichotomy, between the fact that you want your business to stay intact, but at the same time, you are obliged to your customer to innovate, and it's not really a struggle, but it's a challenge, especially for a company that has a lot of responsibility as you guys have. Yeah. So, first of all, I must admit that I didn't know Clearbank that well until now. And it's okay, because sometimes I get to be just the guy who asks the questions. But after this conversation, I think that this business it is first of all as silent as fundamental for the industry, and most importantly, great potential, because if you focus on delivering your service, you need someone who gets your back, and clearly you guys seems to get the backs of all these fintechs that are providing services.
Yeah, we like to think so. We bank 1 in 4 EMIs in the UK, so we're very quiet. And then we bank some of the really interesting. So we bank. It's not just the technology. We have an understanding of our clients. So let's take a provocative inverted commas area. People who work in the crypto space. The big exchange, the Coinbases, the Geminis and everything. Well, we're house banked to all of them in the UK, because we understand what they're trying to do and how they operate and how they control the risks in their business. And we work together with them from a risk point of view. So nothing to do with the technology. We worked in partnership with them to solve their particular challenges. And now all the fiat that goes in and out of the exchanges, most of them go through us, because we've understood not just the easy bit, the plumbing, how they operate, how they control risk, and what they're trying to achieve. And again, they were like us, they were struggling to get that support from the big banks. So we've stepped in and it's gone really well. And that's what we try and do with everybody.
That per se is already a pretty innovative approach in terms of businesses, right?
Yeah, it is. Yeah. Back to that risk thing. There's no problem taking risk if you know what risk you're taking. But make sure you know the risk you're taking, And that's what we pride ourselves on. And it's gone unbelievably well.
John, thank you very much for being with us. It was the first. I hope it won't be the last time.
I hope so.
Welcome to Breaking Banks Europe once more, and thank you.
Thank you for having me.
And it's a wrap.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
Hey guys, welcome back to Breaking Banks Europe, live at SIBOS. I'm here with Silvia Mensdorff-Pouilly, and you guys can't see it, right? But we have been chit-chatting before. I thought she was French, and then I discovered she speaks Spanish and a bit of Italian as well. So we prepared this chat in Spanish.
Multilingual.
Exactly. But long story short, Silvia, welcome to Breaking Banks.
Thank you very much, Matteo, for having me. So, as you said, I'm Silvia Mensdorff-Pouilly. I run the banking and payments team for Europe for FIS. FIS, obviously, one of the largest fintechs globally, right? Between our merchant acquiring business, what we do in capital markets, and banking and payments, we cover almost every aspect of the financial value chain. But my heart is in payments. The funny thing is, though, most people don't know I'm actually an organic chemist, and so we're at Breaking Banks, but I always say if I don't make it in payments, I can always go Breaking Bad.
That's so compelling for this conversation. Incredible. So my first question is, and of course, FIS has been, in my courtyard for a long time, like 20 years, you were there before I started working, at
Before
Swift.
we all started working.
Exactly. So as you said, you not only cover every aspect of the financial value chains, but also you have not only financial services clients, you really cover clients globally from hospitality to, so how do you manage, all these different sectors, how you guys are organized, and how much expertise, you need to have to cover all these businesses?
Yeah, so I think it's about understanding how everything hangs together, but and so being able to give both a broad and orchestrated view of the space, as well as having deep knowledge into different verticals and into different specific pieces of the financial services that we provide. So it's really that combination.
Tell me, as many of the very large players, fintech arrived a bit over a decade ago, and all of a sudden a bunch of smaller companies, startups, new technologies, started playing to the space. How do you guys collaborate with the ecosystem? Talk to us a little bit about
I think specifically about payments, it's really a lot about the value chain and a lot about partnerships, and it's always been like that. And when I think about what is defined as fintech, more of the startup type, then we partner with some fintechs where they provide value-added services, and we provide the deeper layer of the processing. But we also provide actual services to some of the fintechs. So, great example that I would quote would be, for example, GoHenry. So GoHenry, great card, and we've been with GoHenry since they got started. We helped them issue their first card, and they're a fantastic fintech that provides great financial education for parents. And it's very proud to have been part of their growth cycle. So when we provide both services and partnership to the fintech, so we think of ourselves as the fintech of fintechs.
Oh, that's it's super interesting definition. How do you guys, reorganize yourselves, to serve this set of clients that in the past decade sort of flooded the market, right? But before they were not your usual type of counterpart, right?
Yeah, well, so I think we've always partnered quite a bit, and so there are different ways that we can organize ourselves for that. So we also have a fund where we provide funding to some of the fintechs, and we do some of the investments into them. And then it's really looking at our book of our customer base that we have and bringing that together, bringing back to what we see is happening in the industry and kind of the new customer journeys. What I've always found interesting, if I think of myself as at FIS, I've come relatively new into FIS. And you look at FIS and it's such a large company. One of the things that I find fantastic is the capacity of internal innovation that FIS as a large corporate has. So there's a lot of drive and enthusiasm and support for innovating within FIS and for combining different things. And so you see these new customer journeys coming out. We're bringing great things to markets around, for example, virtual cards for financial inclusion, virtual cards for travel, virtual cards in the corporate space for B2B payments, and all of these things. So for me, it's really exciting being able to work at a company where we're providing services directly to consumers, services directly to merchants, services directly to to corporates, to fintechs, and to financial institutions, and having a conversation with all of them and bringing them together around something that, from a human perspective, if you think about it, how critical is payments?
Absolutely.
Because at the end of the day, payments is a means.
It's the last mile of everything.
It's the last mile of everything. It's the last mile of exchanging value with each other, and exchanging value with each other in a way that is a win-win for both sides. Yeah, and so from my perspective, when I think of myself as part of the payment ecosystem, I always think where there's payments, where there's trade, there's less violence, there's less war.
Absolutely.
So I think we provide a great service to the world as a payment ecosystem.
Yeah, I could not agree more. And the auditors know that I'm passionate about Africa, that I work a lot in this ecosystem. And something that people often don't know, and is the way I usually open my keynotes, I put a pair of flip-flops in the first chart, and I said that for 400 million people in Africa, these flip-flops are the way of payments, because they walk to bring cash from point A to point B.
Yeah.
And the more we digitize the financial interaction amongst people, indeed, safety grows, traceability grows,
Absolutely.
the possibility of lending capital grows. So it is fundamental for for the GDP growth. I mean, even if you just take out 20% of the cash, you technically increases 20% the happiness of the people.
Yeah, absolutely. You make people's lives so much more efficient and safe that it's really critical. So we had a great speech by our Queen Maxima of the Netherlands. She opened SIBOS and she talked about financial inclusion and about the responsibility that we as an industry have to really bring payments to everybody, digital payments to everybody that make their lives a lot safer. So it's really interesting to see. And it's also great to see a woman on stage presenting about the ecosystem and bringing back to FIS. So our president, Stephanie Ferris, is really driven to bring together our solutions to deliver new solutions to the market.
So you mentioned innovation, and maybe the last question about innovation is one of my favorite themes, not just because of the whole tribe story, but also because of the theme that there is incremental innovation and what they call disruptive innovation. Mm-hmm. And incremental innovation goes at the speed of whatever you can cope to improve and do a little bit better what you do already. Mm-hmm. But disruptive innovation requires courage, speed, different type of talents, thinking out of the box, and is a different kind of speed and of exercise of innovation altogether. If you want to take out your FIS hat, but I really want to pick your brain and on what you think about these two different speeds of innovation.
Okay, so I think when you think about innovation, it's also thinking about the speed that certain systems move in, right? So I always describe it as a heartbeat of change. So when I think about heartbeat of change in core banking, it's actually relatively slow because it's so difficult to make changes to a core banking system. Then you think about the heartbeat of payments, but then you think about the heartbeat of, for example, fraud detection, which is like this, because the pressure on the system is so large. So I always think that you need to align the drive to innovation to those heartbeats, because you're otherwise too far ahead of the market. The other thing that I would say is really identifying key themes that go across, right? So at the moment we're seeing key themes across a lot of different sectors around lending. How can you bring that together, right? A lot of different sectors around crypto and everything that entails.
Or
right?
creators economy, the new type of work.
Absolutely, the creators economy, and then digital assets around that. But what I would also say is that when new things arise, there's a lot of drive where people are saying, oh, it's going to be cheaper, it's going to be more efficient. And I always think you have to take a step back. So when you think about the digital currencies and also digital assets, everybody's kind of going, oh, it's going to be so much cheaper. Same thing was always said about instant payments compared to, for example, card payments. But then people are also only thinking of the happy flow. One of the reasons there is cost involved in, for example, card payments is that there is a huge rule book that details what happens when things go wrong. So when something goes wrong, it's really easy to identify who has the liability, who has to pay, and there's a whole network for making the flow go go back, right? There's cost involved in that. When new schemes come to the market, they often don't hold that kind of unhappy flow, and over time, the burden, both regulatory and managing the unhappy flow, increases, which increases the cost. But I guess that is what makes this space so exciting, because there's always something new to learn.
I almost want to say that this is a perfect segue to say that payments are actually cool again, and it's always great to see people like Silvia passionate about the space that, frankly, I discovered it through breaking payments, and I found it super interesting as well. Silvia, thank you so much for being with us today.
And thank you, Matteo, for having me.
And have a great SIBOS ahead. And it's a wrap.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.